For some of us, 2020 and 21 are going to be remembered as really difficult, really scary, really challenging years. And for others, they're going to be seen as a once-in-a-decade buying opportunity where they really set themselves and their families up for their futures. So in today's video, I wanted to address the question, which is the elephant in the room, and that is Australia in a recession? And if it isn't, is it going to be in one soon? And if it is going to be in one soon, what does that actually mean for you and I as mum and dad investors trying to set our families up for financial freedom medium to longer term? Now, the first thing that you need to know about all of this is Australia's not in good shape right now, and a lot of countries around the world aren't either. What's happened is we've gone through the first half of a real estate cycle where banks all the way around the world made money really easy. All of that easy, cheap money has gone straight into asset prices, which means we've got overinflated house prices in some parts of the country like Sydney and Melbourne, as well as overinflated stock markets. Now, this just isn't in Australia. There's plenty of cities around the world, plenty of property markets that are overvalued right now, as well as plenty of stock markets around the world. So the first thing we need to accept and acknowledge is Australia's not in the healthiest economic state right now. The second thing we need to acknowledge is that this is completely normal for this stage of the property cycle or the global economic cycle. Now, I've been talking about this for years on camera. The stage that we're now in is called the mid-cycle slowdown. Now, like I said, for some people, it is going to be a horrible couple of years. And for other people, it is going to be an incredible opportunity. So I'll talk more to that opportunity later in the video. But for this particular stage of the cycle, you really need to reduce your risk. Now, for some of you, that means doing absolutely nothing at all. You know, if you're not saving extra money every week at the moment, if you don't have a healthy savings or equity buffer in place, if your property portfolio's costing you money hand over fist and it's extremely negatively geared, if you're in a vulnerable industry or have a vulnerable job or a vulnerable business, then probably just sit out of it for a bit, get yourself in a more stable, safe position and do something. But for 8 out of the 10 people watching this video that are in a strong position, that are just freaked out right now, it is an incredible time to be in the market. Now, what's going on is that 8 out of every 10 people are focusing on here because the loudest voice in the room at the moment is the media, talking about the coronavirus, talking about the stock market, talking about recessions or depressions or the GFC or whatever else is selling advertising space right now. And instead of turning that down, people are hooking onto it. All of our primal fears are hooking onto it, and that's creating people either fighting, as we're seeing over toilet paper rolls in the fucking streets, or we're having people run away, which is people running out of the stock market now, and that's why prices are doing what they're doing. Where I've decided to make a third choice, which is the hardest choice, and that is to accept what's going on, to sit in it, and then to make a very strategic plan to capitalize on while people are doing this, I'll start doing that. So it's important to know that it needs to be a low risk approach to whatever you do now. I don't want to see you rush into the stock market, you know, until we get some stability back. And I don't want to see you rush into buying a place in Sydney and Melbourne because it declined a couple of years ago by 15%. Thinking it's a good buy now, you know, paying 100 grand more than it's worth because there were 70 people at the open home and you felt like you had to, only to realize that after this little, you know, increase in prices that we're seeing in Sydney and the Melbourne at the moment, that there's a good chance stuff's going to sit flat in those markets for a while. When I'm talking about Australia right now, I'm really talking about Brisbane property. Now, Perth property might look like an opportunity, but while there's still 8,000 people a year leaving that city, and Perth's only going to get 8% of the long-term population growth according to the ABS, I would prefer to lower my risk and look at Brisbane, which not only has a long-term performance of 9.7% per annum for the last 50 years, but is actually cheaper to buy now than it was 12 years ago when you take out inflation, according to Core Logic. Now, these are important things to know. The other reason I like Brisbane is the cash flow is insane. It's like buying a 400K property in Sydney 20 years ago, whacking a granny flat on it for 100K. getting $1,000 a week rent for the house in the granny flat now and having a property worth 1.3 million bucks. You know, Brisbane right now, you can buy houses for 400K, build the granny flat, get $600 or $700 a week of cash flow, and you can really set yourself and your family up with not just stability and a low risk asset, but also something that potentially has some big opportunity over the next 30 years to grow in value, because it's sitting at very, very nice levels in terms of affordability for the average person. And there's also 28,000 new people that moved up here last year, Australians moving to Brisbane. If you look at Sydney, 8,000 Australians left Sydney last year. The only reason the population grew was because of all of the internationals moving into the market. So what I also like about Brisbane is that in the second half of the cycle, it generally does better than some other places around Australia. Something that's important to acknowledge is what a recession actually is. Now, because we've got this economic model at the moment that is built off the back of constant never-ending growth and speculation until everybody's a millionaire, or until 10% of people are millionaires and everybody else is just getting by, you know, a recession is sort of the opposite to that model. So what that means is that when we get, you know, 2 quarters in a row of negative growth, which I think we're going to see in Australia this year, we get what's called a technical recession. Now, a technical recession doesn't sound bad, but the word recession, depression, GFC, Great Depression, 1990s recession, dot-com bubble and bust freak people out. Like, they freak people out even more than the coronavirus is at the moment. And so what that leads us to is at a government which feels like it has to step in and do something. And that's what the government's doing right now. Right now it's doing 4 very strategic things, which are levers that the governments have learnt from around the world in the last 100 years to get the show back on the road. Now, why it's important is we might have a short-term dip, but all of the things the government's doing are going to result in very, very, very strong asset and price growth over the next 5-6 years after this happens. So the first thing the government's doing is reducing interest rates. We'll see another rate cut again this year. The next thing the government's doing is helicopter money, which is dropping out money and tax breaks to people so that that money comes back into the economy. The third thing it's doing is quantitative easing or printing money, which is great if you own assets and absolutely horrible if you've got cash in the bank. The fourth thing that it's doing is increasing infrastructure spending and trying to devise a plan for projects so that we can keep people employed. Now, what happens in a recession is generally some businesses fail a little bit. We get an increase in the unemployment rates. We generally get a lot of fear. And we generally get a pretty bumpy ride, at least in the stock market and potentially also in certain businesses, because people aren't making sense right now. Like, if you look at what's being presented in the media right now, like, people are crazy. Like, and these things happen. You saw it in the Bitcoin market in 2017, where it went from dirt cheap to super high to dirt cheap again. And the property market, the economic cycle, and the stock markets are just the same people doing the same thing, just over a longer period of time. Now, the big question we all has is, what's this actually going to do for house prices in Australia? Are prices going to go up? Are they going to go sideways, or are they going to decline? And if they decline, how far are they going to go? Now, one thing I love about the Australian government is they'll let the banks do some ridiculous speculating. Like, I heard at one point in 2017, Commonwealth Bank was more profitable than Warren Buffett's bank. You know, and the guys at Commonwealth Bank are probably like, yeah, we're killing it. The stock shareholders are like, yeah, we're killing it. And then you look at how they made that profit, and it's just off the back of lending heaps of money out to houses in Sydney and Melbourne, which caused a ridiculous bubble. And now, you know, unfortunately, people can't live there, which is why 28,000 new people moved up here in the last year alone. Now, who knows what's going to happen? Who knows if prices are going to go up? Literally in the last quarter, house prices in Sydney and Melbourne went up by 5%. It went up by 2.5% in Brisbane. But now that we've got all this negative media, I think it's probably going to be more like flatness, or even potentially a decline in the short term in some areas, at least until we figure out globally this coronavirus stuff. Now, what's important to know about this current market conditions is the economic impact, and that's what the stock market's trying to do. It's trying to understand the economic impact on businesses so that they can accurately price the stock market based on what's happening with the coronavirus. Now, there's absolutely no way in the world that China's GDP is not being affected from having a billion people sitting in their homes right now, or Italy's going to have a major economic impact from having 60 million people sitting in their homes for somewhere between 2 weeks and 2 months, or when it comes to Australia, which it will. My doctor yesterday said that within 2.5 months, basically every human on the planet is going to have had exposure to the virus. Have a look at what the New Zealand Prime Minister, along with the people that she interviewed, saying about the virus. Incredible video on YouTube or her Instagram, where it just gives a bit of perspective around this stuff, how you can look after yourself and your family. Made me sleep a hell of a lot better last night, I'm not going to lie. But these things happen. We get these mid-cycle events, we get wars globally, we get famines, we get droughts, we get floods, we get tornadoes, we get economic conditions that are unstable, we get these mid-cycle slowdown points, we get Great Depressions and recessions. So now what? Now what are you going to do? These things happen. What are you going to do? Are you going to do what 80% of people do, and that's bury the head in the sand in a once in a 10-year buying opportunity? Or are you going to slowly educate yourself on the marketplace and make a strong decision only if you're in a very, very low risk financial position, and start thinking about this stuff? And whether you do something on your own or with someone's support this year or in 5 years' time, what we really want is just to see you financially free with choices in your life, so that these economic events don't even matter to you, because you've got a passive income coming in for life, and you've got the choice to work or not work, so that financial pressure's taken off you and your family, and you can exist and continue to do what you love and add value to the world. So hope you've enjoyed this little update. Please subscribe to the channel. I expect that there's going to be a lot of people with different opinions at the moment, and that is cool. That is completely fine. We're a channel that is trying to put out, and a business that's trying to put out alternative messages and to help you navigate your way through this market with logic, so that you can set yourself and your family up for a better decision in the future. But completely understand if you need to sit there for a couple of years before you reach out and we start the conversation as well. But I truly wish you all the best. Please stay safe. Please be healthy, and let's work through this together. I'll continue to educate you as the year progresses. Cheers.